Welcome to the Deep Dive, where we help you sift through all the noise and uncover those really important insights. So before we start, I want to say if you're looking to expand your knowledge and get inspired by some new ideas and maybe gain a deeper understanding of what it means to be successful, make sure to subscribe to our YouTube channel, Necessary Cookies. You know, we don't just focus on headlines, we go deeper. We offer really thoughtful content that can guide you and spark your own wisdom to become the best version of yourself. So today we're diving into the world of cryptocurrency based on some fascinating material you sent our way.
Absolutely. We have some interesting stuff to unpack today. We're going to be taking a look at an article from jitcoinist.com that talks about Bitcoin's MVRV ratio and what it could be signaling for the market. Then we'll move on to a report from you today that details a pretty substantial Bitcoin transfer. And finally, we'll dig into a piece from B in Crypto about a high leverage trade on PEPE that seems to be facing some serious headwinds.
So basically our mission today is to break down these three very different events that are happening in the crypto space and see if we can get a clearer picture of what the current sentiment is and maybe even get a few hints about where things might be headed. Does that sound right?
Yeah, spot on. We'll try to unpack what each of these articles is telling us and why it could matter for anyone who's following crypto.
All right, let's jump right in and start with that Bitcoinist.com article that talks about this MVRV ratio and a potential buying opportunity for Bitcoin. Now, I have to admit, MVRV isn't exactly a term I use every day. So could you break it down for us?
Sure. The MVRV ratio, which stands for market value to realized value, is essentially a way to assess whether Bitcoin is overvalued or undervalued at a given moment. It's basically comparing the current market price of Bitcoin to the average price at which all the Bitcoins currently in circulation were last moved on the blockchain. So you can think of it as the average acquisition price across the entire Bitcoin supply.
Gotcha. So if the market price we see on exchanges is way higher than this realized value, it could be a sign that things are getting a little frothy, maybe even a bit of a bubble forming.
Exactly. And on the flip side, if the market price drops down near or even below that realized value, some analysts interpret that as a sign that the market might be oversold, creating a potentially good entry point for buyers.
Makes sense. Now, the Bitcoinist article talks about an analyst named Ali Martinez who suggests that a prime Bitcoin accumulation zone could be emerging when this MVRV ratio climbs back above its 70-day moving average. Can you explain the significance of that crossover for us?
Sure. So historically speaking, when the MVRV ratio dips below that 7-day moving average and then crosses back above it, that's often been a signal of a good time to buy Bitcoin for those who are in it for the long haul. Those who aren't trying to time the market perfectly. Moving averages essentially smooth out the price fluctuations and help us see the underlying trend more clearly. This specific crossover has in the past suggested that a period of undervaluation might be coming to an end, and we could be seeing the beginning of some upward momentum.
Okay, so potentially a turning point, as the article suggests. But the article also kind of paints this picture of a market that's under some pretty intense selling pressure right now, struggling below $82,000 after failing to break back above $90,000. And then there's all the stuff happening in the broader economy with all the, macroeconomic instability that's going on. So how does this potentially bullish MVRV signal fit with all of that bearishness that we're seeing in the short term?
Yeah, that's the big question, isn't it? While this MVRV crossover does offer a potentially optimistic view for the long term based on what's happened in the past, it's important to remember that we're in a market that's definitely showing some bearish characteristics right now. The fact that Bitcoin hasn't been able to break through those resistance levels and that there's still this selling pressure indicates that there's still a lot of uncertainty out there and the price could definitely continue to drop.
So it's kind of like we've got this long-term weather forecast hinting at sunshine, but right now it's still pouring rain.
That's a good way to put it. The article stresses that for this MVRV signal to really play out as a true buying opportunity, we'd need to see those Bitcoin bulls step in and really defend that $82,000 level, and then push the price back up above those key resistance zones. If we don't see that confirmation, it's possible that the potential upside suggested by the MVRV ratio might not actually materialize anytime soon.
And we're not just talking about gut feelings here, right? The article mentions Bitcoin's 8% drop since late March, and its struggle to stay above some pretty important moving averages, specifically the 4-hour 200 MA and EMA around that $85,000 to $87,000 range. Now, for anyone listening who isn't glued to the charts, these moving averages are basically indicators that a lot of people use to gauge the short-term and medium-term trends in the market. When the price drops below them and stays below them, it often suggests that the sellers have the upper hand at that moment.
Right, you are. Those moving averages can often act as support levels when the price is trending upwards. So when the price falls below them and doesn't bounce back, it definitely strengthens that bearish sentiment. The article also warns that if that $82,000 support level doesn't hold, we could be in for a bigger correction, potentially taking Bitcoin below $80,000.
So just to recap, the MVRV ratio is giving us a possible signal that there could be some buying interest on the horizon, but the current price action is definitely telling a more cautious story, emphasizing how important those key support and resistance levels are. All right, let's shift gears now and talk about that You Today article that details a pretty massive Bitcoin transfer, something like $333 million worth of Bitcoin changing hands. That's definitely something that gets your attention. What details do we have on this transfer?
This report highlights a specific transfer of 4,000 Bitcoin, which at the time was worth about $332 million. This transaction was picked up by Whale Alert, which is a service that monitors large cryptocurrency movements on the blockchain. The Bitcoin was sent to the Kraken exchange, and it came from an address labeled as BC1QCPFLJ68.
And do we know anything about who's behind that original address? Is it connected to some big institution or a major player in the crypto world?
Not really. The article mentions that this address first showed up on the blockchain about a year ago. It initially received a tiny test transaction from Kraken, and since then it's been involved in various transfers with other addresses that haven't been publicly identified. So it doesn't seem to be directly linked to any well-known entity, which is why the article calls it mysterious.
And what's really wild is that even after moving over $330 million in Bitcoin, this wallet still has a huge balance, close to 12,000 BTC, which translates to roughly $1 billion. That definitely makes you wonder what their game plan is.
For sure. When you see a huge amount of Bitcoin being moved to an exchange like Kraken, the first thing people usually think is that someone's getting ready to sell. Exchanges provide the liquidity that you need to sell off a big chunk of crypto relatively quickly.
So the simplest explanation is that someone's preparing to cash out a big portion of their Bitcoin holdings.
Yeah, that's a common assumption. But it's important to keep in mind, and the article makes this point, that these big transfers don't always lead to immediate market action. There could be other reasons why someone would move that much Bitcoin. For example, they might be moving it for security reasons, transferring it to the exchange's more secure storage system. Or it's possible they're setting up for an over-the-counter OTC trade where large holders use an exchange as a middleman to find a buyer without affecting the public market too much.
Okay, so it's not necessarily a clear sign that a big public sale is coming. So what happened in the market after this transfer? Did Bitcoin's price suddenly drop?
Well, the article mentions that Bitcoin did dip below $83,000 after the transfer was noticed, but then it recovered a little bit, gaining back about 1% over the next 24 hours. So at least initially, it seems like the market wasn't too fazed by this particular transaction.
So like the You Today article asks, the big question is whether this was just a one-time thing or if it's part of a bigger strategy. With $1 billion worth of Bitcoin still sitting in that wallet, it feels like there could be more to the story.
Definitely. The fact that there's so much Bitcoin remaining in that wallet creates a lot of uncertainty. Will we see more transfers to exchanges? Was this just some kind of tactical maneuver? It's definitely something worth watching to see if it leads to more selling pressure down the line.
Okay, so we've got potential buying signals and mysterious whales moving massive amounts of Bitcoin. Now let's jump into the world of high-stakes, high-leverage trading with this Be in Crypto article that talks about a PPE trade that seems to have gone pretty sour. Now, for anyone listening who's not a seasoned crypto trader, could you explain what leveraged trading means in this situation?
Sure. So leverage trading lets you basically control more of an asset than you actually have the money for. You're essentially borrowing funds to boost your potential gains. For example, with 10x leverage, like we see in this PPE trade, you could control $100,000 worth of PPE with only $10,000 of your own capital. Now, obviously, this can really ramp up your profits if the price moves in your favor, but it also amplifies your losses if things go the other way.
High risk, high reward kind of situation. And this article is talking about a whale, which is basically someone with a ton of money who made a huge leverage bet on this meme coin called PEPE.
That's right. This trader opened a $27.53 million long position on PEP using that 10x leverage. So they were betting that the price of PPE would go up.
And it sounds like that bet didn't exactly go as planned. The article mentions that they were facing unrealized losses of over $3.2 million.
Ouch. Yeah, the market moved against them pretty quickly, resulting in those big paper losses. The whale, whose wallet address is 0 by 507, and then a bunch of other characters entered the trade at a price of 0.0081,000 per 1,000 PPE. It's worth noting that PP's price is usually quoted per 1,000 tokens.
Yeah.
The article points out that if the price drops to 0.005212, their entire position would be liquidated.
Liquidated, meaning the exchange would automatically close their position. They'd be stuck with those losses, right? And to try and stop that from happening, they actually added more money to their position.
Yeah, exactly. To avoid getting forced out of the trade, they added another $3.818 million in USDC as margin. This basically gives them a lower liquidation price, so the trade has more breathing room to potentially bounce back.
But the article really emphasizes the inherent riskiness of trading meme coins like PEE.
Yeah.
They say these coins are driven more by hype and social media trends than by actual fundamental value. Sounds like a recipe for some wild price swings.
Oh, for sure. Meme coins are notorious for their volatility. Their prices tend to move based on online trends, social media hype, what the community is saying, rather than those traditional financial indicators. So any leveraged bet on a meme coin, especially with that much leverage, is incredibly risky. And as the article puts it, increasingly unstable.
And the scary part is that the potential fallout from this trade going bad isn't limited to this one trader. The article even talks about the possibility of cascading sell-offs and maybe even some broader turbulence in the crypto market if this whale's position gets liquidated. How could that happen?
Well, if they get liquidated, it means a massive amount of PEPE is suddenly getting dumped onto the market. That could trigger a sharp and rapid drop in PPE's price. And that sudden drop could then lead to other leveraged traders who are also long on PPE getting liquidated as well, creating this kind of snowball effect of selling pressure. These kinds of situations can definitely create fear and uncertainty that spills over into other meme coins and potentially even the broader crypto market.
And this isn't even an isolated incident. The article mentions a similar situation with a big influencer on X who also went long on Ethereum with leverage and is now sitting on some unrealized losses. So it's not just meme coins that are susceptible to this kind of risk.
Absolutely. That example with Ethereum, which is a more established cryptocurrency with, stronger fundamentals than PPE, really shows that these dangers can pop up anywhere when you're using high leverage, especially in a market that's as volatile as crypto.
And just to give everyone an update on the PEPE situation, the article says that its price had already fallen over 5% in the 24 hours before the article was published and was trading around 0.00000000721. So this whale's long position is definitely still in a precarious spot.
No doubt about it. It really highlights how fragile things are right now and how much more the price could swing in the near future.
So as we wrap up this deep dive, we've looked at 3 very different snapshots of what's happening in the crypto world. We've got a potential long-term indicator suggesting a buying opportunity for Bitcoin, but that's happening against a backdrop of bearish price action and all this uncertainty in the global economy. Then we have this mysterious whale moving a massive amount of Bitcoin to an exchange, leaving us to guess about their motives and what it could mean for the market. And finally, we have a really clear example of the dangers of leverage with this multi-million-dollar bet on a meme coin that's teetering on the edge of disaster.
I think you summed it up perfectly. These 3 seemingly unrelated events actually give us a pretty good overview of how complex the crypto market is right now. We've got some potential optimism brewing for the long term, but we're also dealing with uncertainty created by the actions of these large holders. And then we have this very real reminder of how risky things can get when you're playing with high leverage.
So for everyone listening out there, how do you make sense of all these different signals when you're trying to figure out where the market might be heading and what opportunities or risks might be out there? It's definitely not a straightforward situation right now. And I think it really underscores the importance of not putting all your eggs in one basket and looking at a variety of different data points.
Couldn't agree more.
Yeah.
Relying on just one indicator or event can be really misleading. You've got to consider a whole range of information to get a more accurate picture.
This has been a fantastic deep dive into some of the most important things happening in crypto. Thank you so much for bringing these articles to our attention.
It was my pleasure. It's always great to connect the dots and see how different events in the market relate to each other.
And to all of you listening, thank you so much for joining us for this deep dive. We hope you walked away with some valuable knowledge and a clearer understanding of what's going on in the world of crypto. And hey, if you're looking for even more insights, motivation, inspiration, and ideas to help you achieve your goals and become the best version of yourself, make sure to subscribe to our YouTube channel, Necessary Cookies. We offer thoughtful content that goes beyond the headlines to help guide you and ignite your own wisdom. We'll see you next time for another deep dive.
See you then.
Bye, everyone.